Hey guys, and welcome to this week's Sunday Market Outlook. So we're going to jump right into it, going on to the dollar index. And as you guys can see, we're looking at the monthly time frame. Now, there's a few things I'd like to kind of spend time discussing as it relates to this particular um, uh, index. And the first thing is the fact that we have this double top formation over here. Now, it's safe to say that this double top does represent some significance in the current market. Okay. And the reason I'm saying that is because if we look at the market most recently rejecting this key resistance level at 102.50, what we can see is price is actually still in mid swing to the downside. Now, I am mindful that in the short term, we could see a little bit of bullish momentum. However, in the overall structure of this particular market, it's actually poised for the downside on that basis. Now, granted that the market has been kind of moving in this corrective pattern for the longest time now, and one could assume that we could be breaking out at any point in time. But I'm actually just waiting to see how is the price going to respond to this key moving average over here, as well as the monthly pivot. Now, bear in mind that last month we did close above the pivot level, but that in and of itself doesn't necessarily suggest that we're going to see a bullish month this month, even though we had a positive rejection of the 50 period moving average as well as a rejection of the monthly pivot. We didn't necessarily build enough momentum to see the market going further up. And also, we must also consider the fact that the market is just coming off a key monthly resistance. A key monthly reversal in the form of this double top over here, and we actually in the process of kind of pushing price further down with negative momentum in the background, so suggesting that we can see a continuation of the dollar weakening in the long run. But if we're looking at it from a short-term perspective, i.e., what's coming up this week, then I look at it as the following. Okay, if we go over into our weekly time frame, one of the things I can see is that the market is kind of uh, gone to a point where the moving average is acting as dynamic resistance. Now, this is a very important thing for me because this suggests now that price is no longer um, building key support levels to bounce off of, but instead is starting to build key resistance levels to sell off of. So what this implies is that the market is now breaking key what used to be dynamic support, and in the process of breaking this pivot level, which is acting as a level of support as well. With price having the capacity to actually break through these levels, eventually there's not going to be any support levels left, which means that there's not going to be any opportunity for the market to build momentum to the upside from. Instead, what's going to happen is that there's going to be key levels of resistance that the market could actually retrace towards and actually fall from. Now, with that being said, what we're waiting for is to see how is the market going to respond to this pivot level over here, as well as this 200 moving average as well. But in the main, I'm actually looking for the market to continue breaking further to the downside, because if we go into the daily time frame, we can actually see why the market is gradually building a little bit of momentum, and that is purely because of the fact that we are in this retracement. Okay, now bear in mind, guys, that I see this as my move to the downside. Then you had this kind of sideways moving corrective pattern, and then a continuation, which is valid in and of itself. But what we have is a repeat of this entire process, where we have the market giving us the direction and now forming another ascending channel, which implies that this is in fact a reversal signal. What I argue is that we could see, if the price does in fact want to run further up, we're running towards this moving average over here. And with meeting this moving average over here, we could see price testing a dynamic level of resistance. It is in a key resistance zone at 9800, as well as the fact that we also have the price potentially wanting to break this upward sloping trend line. So in a sense, what we have is the market is actually in a position where it's poising itself at the downside. It's just a case of having us waiting and seeing how is the market going to respond. You see, as it stands, we have this as a double top. This is currently the level to break if the market wants to retrace a bit higher. If the market breaks this key resistance level at, let's say, 97.70, then we could see the price kind of testing this upward sloping trend line, the top of the channel basically, um, to suggest that we're meeting up with our moving averages as well as the key level of resistance. And this is also about a 61.8% fib retracement if we measure it from the most recent high to the most recent low. All of those factors suggests that once the price gets here or around there, we're actually looking at the market to hit a key resistance level, a perfect sell zone, and that's going to be where you can prep yourself for a short. Alternatively, what you can do is we have to first wait to see how the market responds to this level over here, because as you guys can see, we had tested this level before, and we're going to go over to another pair where I can show you a very good example of what happens when the market actually forms a double top. It doesn't have to break through this level and give us a third touch at the top of the corrective pattern. It can actually use this as a sufficient amount of evidence to suggest that we can see the price drop. But in and of itself, I would actually wait and see how the market is going to respond. Bear in mind that we do have a daily hammer that was closed. Now, one can argue that this is closing in the middle of nowhere, but I would argue that because we're on a what we would call a type 2 support level, because it's a slant, it's as a trend line support, we could see the price actually building a little bit of momentum further to the upside. So unless the market breaks through, that's when we can confirm that the correction has been broken, and that can give us our indication that we can start prepping ourselves for sells as it relates to the dollar. But as it stands, we're just going to have to wait and see how does the market kind of respond to the current structure that it's in as it relates to this upward sloping trend line, as well as this key resistance level, or minor resistance level of 97.70. And just to summarize, if we were to break 97.70, we could potentially see the price going all the way to test our moving average, our 50 period moving average, um, which will more or less line up with our upward sloping trend line. So this is either going to be a form of a channel or a rising wedge. We don't know yet. That can only be confirmed once we see a break of this minor resistance level. Alternatively, we will then wait for the break of the upward sloping trend line, which will confirm direction, and that's going to be where we prep ourselves for sell opportunities. So that's the dollar index. Let's go over to our next pair. Okay, guys, moving on to our next pair, the Australian dollar, US dollar. In this pair, we can actually see that the market has actually given us quite a nice bullish candle, which closed last month nice and bullish. We didn't close above the key resistance level of 0.7 thousand, but we are starting to make some serious strides to the upside. Now, I must go on record saying that we do have positive momentum coming in from our monthly time frames all the way to our weekly time frames, and that is a very important fact to note, because that suggests that we actually have enough buyers in the market to push the value further up. And I am actually looking at price to potentially test our monthly 50 period moving average, and I know that might not seem very far, but if you take it into context where we scale over to our lower time frames, you can actually see that there is quite a significant amount of um, ground to cover from where we are to that particular level. So what I will do is I will actually go ahead and just highlight this this section over here. Okay, so I'm going to highlight this section over here because that's the section that we're ultimately targeting. So if we go over into the weekly time frame, what we can see is that the market has now begun its process of breaking key resistance levels and start using those levels as support. Now, I'm mindful that we are on this key monthly pivot over here, and this pivot has definitely uh, been keeping price down, containing price below 0.7 thousand. But in the same breath, what we can see is that even though we had multiple rejections of not only the pivot level, but also the moving average that we see over here, we still see price having the capacity to break through it. And once we have that breakthrough, that's going to be the moment we can start prepping ourselves to see the market actually build enough momentum to test this key resistance level over here. Now, I want to go over into the daily time frame because we'll be able to break it down in a lot more context in that fashion. Because notice that now our moving averages have started to indicate strong signs of dynamic support, because what we have is our 50 period moving average breaking through these two long-term moving averages, suggesting that we're starting to get a lot of buys into this market. Now, I'm also mindful that we have this upward sloping trend line guiding price kind of to the upside. And so if you were to look at it from this perspective, you can actually argue that you're in a bit of a channel, which I don't dispute. I'm not saying that that's not the case, but what I'm also mindful of is that not only do we have the momentum, but we also have the market doing the following. We also have the market, if I was to remove that, forming this reversal pattern over here. Okay, so this is our bull flag looking to continue further to the upside. And that suggests that we can actually have the market building enough momentum to the upside. However, I'm only looking for the market to do the following. I'm looking for the market to in the short term break these resistance levels over here. Now, I'm also aware that we've broken this section over here, which is excellent. It's brilliant. But if we can break above this high, if we can break these peak highs over here, then we're starting to build enough momentum to break the overall resistance level, which will suggest that we can then confirm that there's between where the market is and where the market's headed, there's nothing keeping the market from getting there. At the moment, we have a significant amount of variables that could act as barriers um, in terms of us going along, because we're going to go along into a whole bunch of resistance levels. But based on what I can see in terms of momentum and in terms of market structure, I can actually see the market breaking those levels, as we've already broken very, very strong levels of resistance in the form of these moving averages that in fact still is poised for the downside. But if you look at the 50 period moving average, we're starting to see a little bit of deceleration in terms of the direction, where where we have the 50 period moving average still pointing to the downside. However, in pointing to the downside, if we start to see that it starts turning, then that gives us a very strong indication of what price may want to well do. Now, I'm also mindful that the market came from a very, very peak low, and we currently, I'm not surprised that we're fighting on this level, because it's been such a key level, and the markets had such a lot of things that I had to go through to get to this level. And so I'm not surprised to see that we are stalling around this region over here. And the question comes in, can we still turn from it? Absolutely. There's nothing keeping the market from actually turning on this particular level. And if it does, I mean, it's valid in and of itself. But if we're looking at what the market has done, and we're looking at where the market is, we can still see that there is enough scope to have the market at least test this key level of resistance, which lines up very well with um, our monthly 50 period moving average. So that's the Australian dollar, US dollar. Let's jump over to our next pair. Okay, so our next pair is going to be the euro dollar. Now, the euro dollar is inversely correlated with the dollar index. And for the longest while, I mean, I don't know what's been happening here. I've been trying to identify what the market's intention is as it relates to this particular price action. And it's safe to say that we are currently in a corrective stage. But with that being said, a lot of this is going to be referenced from what we discussed on the dollar index. And as you guys can see, that unlike the Australian dollar, US dollar, on a we have more rejections of a resistance than we do on any other pair, I would argue. Um, First and foremost, 1.1360, which is our resistance level, has been rejected. We have our moving average, our 200 period moving average, which has been rejected. And then we have this pivot level, which is currently acting as dynamic support. And all the more, these are continuous signs of reversal in the form of these shooting stars, long wicks, all signs of bullish exhaustion, which ultimately suggest that we can see the price actually drop. So if the price actually drops, I won't necessarily be too surprised. But the question is, how far down can it drop? Now, I can say that we could see the market test our monthly 50, which I wouldn't be too surprised if that were the case. But if I go over into the daily time frame, what I see is the market kind of positioning itself to a point where we could see a potential pullback to this high, because we never really tested this key high over here. We came close to testing it, uh, built a little bit of momentum, but we still made a lower high. And the fact that we made a lower high and another lower high tells me now that the price is actually in a position where it could pull back a little bit deeper. I'm actually looking for price to come and test my daily 50, and that's going to be sufficient, a sufficient retracement to give me enough confidence to see this market actually running further to the upside. Now, I'm trying to look at all of the key factors. The smallest factor, for one, we had this high over here, then we actually had a lower high after testing that key resistance level. And then following that, we had a series of lower highs as well. At this point in time, I'm actually looking for price to drop to around this region over here. And this will be where I start evaluating opportunities of possible buys. But if it lines up, if it comes even further down, I'm not surprised, because we do have the moving average coming in and guiding price to the upside. But if we go over into our higher time frames, our moving averages still carries a lot of significance. Unlike what we saw on the Australian dollar, the market hasn't really broken any key moving averages on the monthly. Nor has it really broken any key moving averages on the weekly, with the exception that last week closed above this moving average, but not by much. So can we still see the market coming down? It's very difficult to ignore the fact that these are such strong reversal signals, and I can't necessarily say that just because my overall bias is for the upside, that this market is not going to drop in the short term. So next week we could potentially see a bearish week for the euro, but that's only gonna be confirmed once we see how the market responds to these factors. So as it stands, I'm neutral when it comes to the euro, but I'm mindful that I'm leaning more to the short side, with the euro, as I am to the long side. So in the long term, we could definitely still see momentum pushing further to the upside, but as it stands for the week ahead, I'm actually looking for the euro to kind of drop in value before it actually moves further up in value. So that's the euro dollar. Let's go ahead and check out our next pair. Okay, guys, so our next pair is going to be the pound dollar. Now, the pound dollar over here is on the monthly time frame. Now, notice that we're coming off a monthly support. Now, this is a very important fact to be mindful of. We're coming off a monthly support, and when we go over into the weekly, we can actually start to see that the market is starting to build a bit of momentum to the upside. So we do have positive momentum on the monthly, and we have positive momentum on the weekly. And although our moving averages are kind of initially pointing to the downside, I do believe that we have what it takes to see the market start breaking these moving averages, and start using them as key levels of support. Now, on this particular week, or last week, or the week that just passed, we saw the market really using this S1 support level, okay, at 2300. We really saw the market using that as a strong level of support. And because we see it as a strong level of support, we also have to consider the candle formation that formed over here, which was basically a rising, which was a morning star. Sorry, I get confused with the candlestick formation sometimes. The morning star formation. And so we had this morning star formation on the weekly. If we look at how the market has been responding to this key resistance level, we also see that we're currently on the pivot as well, forming this beautiful high test candle. And the moving averages is still kind of acting as dynamic support. And so what I'm looking for is the market to actually push further to the upside. So the reason I'm looking at that is for the following. So first of all, if I look at the market using this level as a support level, let me just throw that line in a bit better. If I'm looking at the market for using this particular price as a support level, let me round it off to 22. I can even round it off to 2250. Um, this is a very unique level of support. I always want to see how the market got there. Okay. And if we zoom in, what you can see is that the market got there, and the pattern that it formed when it got there was this call it a falling wedge or descending channel or whatever you want to call it, um, the market formed this pattern. When we broke out of this pattern, currently we're hovering. Okay, so hovering is not necessarily too surprising, but the fact that we got there in this corrective manner suggests that we can actually see enough momentum built from this point to move further up. And the fact that we've broken our 50 period moving average and we're in the process of breaking this 100 period moving average, I could see the market running all the way to the 200 moving average, which is not a bad run, especially for a week's work. So my bias for the pound is definitely to the upside, and it does offer a greater deal of value than we do find on the euro. But bear in mind, guys, that this is but just my opinion. You might have a completely different outlook based on your strategy and your style of analysis. But like I will always encourage you, if you do have a difference in opinion, please go ahead and share it in the comment section below because we learn from one another. But ultimately, my bias for the pound dollar is definitely to the upside as it relates to this week. It's just a case of waiting and seeing how much more development we need in terms of this current setup in order for us to take a trade. So that's the pound dollar. Let's go over to our next pair. Okay, guys. So I'm going to park our session with the CAD. I'm not going to look at the yen because the yen is still as choppy as ever, and I don't really know what's happening there, so I'm not going to spend time on that pair. So I'm going to consider this our last pair, the CAD, the dollar CAD, and this is going to be the pair that I'm going to use and reference what I said earlier. It's going to be found on the CAD yen. So let's go ahead and jump over to our daily chart. Okay, before we get there, I just want you to guys to see that we're still moving down. Okay, now that's important because my bias for this pair is to the downside. Now, initially, I was looking for the price to actually pull back a bit further to the upside, but after what happened last week, we had a beautiful bearish engulfing candlestick pattern forming over here. And if we go over to the daily, we can actually see this in greater detail. So on the dollar index, I was talking about the market potentially wanting to form a third touch, as it were. So I was actually in a long on this particular position on this particular pair, and I was actually looking for price to run further up to line up with all of these other key factors and then reverse the downside. But I was also mindful that we currently on this key resistance level, it's very probable that this could be the double top that we were waiting for to see price going further down. And if price were to use this as a resistance level to break this upward sloping trend line, then I would argue that we could start to see the price actually dropping further from here, of which the market is currently doing. Now, at the moment, as it stands, my bias for this pair is to the downside. I do um, see the market kind of stalling around this 200 period moving average over here, but it doesn't remove my the fact that I'm still seeing this market dropping. So what I'm actually looking for in order for me to get into this position, I'm going to need to see a bit of a pullback, but that's going to have to happen on the intraday charts because we already have the market moving further down. What I would like to see is a confirmed break. So, for example, at the end of tomorrow, we could see a very strong bearish candle that potentially even breaks this moving average over here because I'm mindful that when we get here, I'm not going to be surprised if we see a little bit of um, reservations from the market's perspective, where it might want to use this as an opportunity to pull back a slight bit. But if that be the case, then I'm not surprised about it. If I find an intraday opportunity, um, if I find an intraday entry tomorrow, then this could be my first target, as I'm pretty sure that we're going to see a little bit of market stalling on here. But once broken, between where we are and where the market could potentially go, there's no limit. Okay, there is absolutely no limit. We could come and revisit these lows over here, which lines up very nicely with the prior highs that we find over here. So that's the Canadian dollar. So my bias, like I said, for this pair is to the downside, and it's just a case of finding that intraday entry if I want to trade the momentum running further down. So guys, this is the Sunday market outlook. I hope that I was able to communicate everything to a point where you guys understand what my thought process is. But beyond that, to a point where you are able to get value out of what I shared. Essentially, if you guys would like to know more, please consider inboxing or sending or writing a little bit of a message in the comment section below if you have any thoughts with regards to what we covered, or you have any pairs that you'd like me to potentially review. Like I said, I can only give you my opinion, and it doesn't obviously have to happen the way I say it's going to happen. But that is but just my opinion. For the most part, guys, I hope that you're really finding value in the content that we're uploading. And if you are and you haven't subscribed, consider subscribing. And upon doing so, also hit that notification bell, because that will let you know whenever we upload new content. And if you like the content that we shared here today, and you know of someone that may find this valuable, consider sharing it with them as well. For the most part, guys, I hope that you have a brilliant and profitable week ahead. I look forward to chatting to you all during the course of next week. But up until then, cheers and bye for now.